Adobe stock is down 65% from all-time high, but in this video I will share with you the real reason why investors are not buying the dip in Adobe. This will be the action-packed video. We'll review the business segments of Adobe, understand why the stock is crashing, review the financials and see is there any red or yellow flag we can already see in the financials of the company. I will share with you the exact reason why investors are not buying the dip in Adobe stock, and when they start buying, the stock will rip higher. We will do the projection for Adobe stock and run reverse DCF to understand if the company is cheap based on the current valuation. If you are planning to buy Adobe stock or you are existing Adobe shareholder, this video will be extremely useful for you. Please smash that like button and we'll begin. Adobe has 4 business segments, but what we need to focus is only 2: digital media and digital experience. Services and other revenue and product revenue are one-time license or consulting services. We can ignore them because they are not moving the needle for the company. Inside the digital media, you have Creative Cloud, which includes Photoshop, Illustrator, Premiere Pro, After Effects, Lightroom, all the stuff creators are using to edit photos, videos, animations, and create movies and films. And also Document Cloud, which includes Acrobat, PDF tools, Adobe Sign, etc. In digital experience, you have Adobe Analytics, Adobe Experience Manager, marketing automation. This is mostly used by large enterprises and marketing teams. So why Adobe stock keeps going down? The latest earnings was not bad at all. Earnings per share was reported $6.06 adjusted versus $5.87 expected. On the revenue side, $6.4 billion versus $6.28 billion expected. So 2 beats both on the top and bottom line. I think the reason Adobe stock was down on the latest earnings report is because the CEO is stepping down and they are looking for the next CEO. This is a really big deal because this CEO joined the company in 1998 and became CEO in 2007, so he was leading the company for almost 20 years, which is absolutely mind-blowing number. And he transitioned Adobe from the one-time payment to subscription recurring revenue business model, which is absolutely game-changing for the company. We'll be using InvestKit to understand, is there any justification for the 65% down for Adobe stock? Is there any red or yellow flags in Adobe's financials? Starting from profitability, revenue, income, and free cash flow. ChatGPT was introduced in November 2022. This is exactly this time. After that, Adobe revenue grew from 4.53 billion to 6.4 billion. I don't see any significant slowdown in the revenue. Similar picture we can see for net income and free cash flow as well. Let's see from the margin perspective. Usually when companies see the problem in a user's demand and see the high churn, they will use sales and marketing budget to attract more customers to get higher user growth. From the perspective of operating margin, I do not see any drop after ChatGPT was introduced in November 2022. The operating margin currently is all-time high in the latest financial year. Adobe is free cash flow machine, generating north of $10 billion in free cash flow in the latest financial year. And guess how the company is distributing that money? More than 100% of free cash flow is used to buy back stock. $11.28 billion with a free cash flow of less than $10 billion is used to buy stock. The management is telling you, we believe the stock is cheap and they are buying back every share they can. The shares outstanding are dropping and the buyback reaccelerated in the latest financial year with almost 6% of the company was bought back in 1 year. What about the valuation? If Adobe is really cheap, based on a medium for last 10 years, medium PE is 50 and currently Adobe is trading with 13.85. There was time when Adobe was traded at 20 price to sales in 2020 and 2021. Currently Adobe is traded at 4 times sales. This is very cheap for recurring revenue business like Adobe. Price to free cash flow medium is a 34 and currently Adobe is traded at less than 10 price to free cash flow. This is laughable. Using the chart builder on InvestKit, you can build any chart for any company or even multiple companies. So currently for Adobe, we choose share repurchases and price to earnings to understand if management is smartly deploying the capital to buy back stock. So currently you can see that when the price to earnings is lower, for example, here we can see price to earnings drop to around 30 and they enabled higher buyback, and then price to earnings increased back to 50 and they bought back significantly less amount of shares. And now during Adobe's valuation is absolutely collapsing, they are enabling significant buyback with in the latest financial year, as I mentioned, they bought back more than $11 billion and currently Adobe is trading at PE of 14 and with forward PE less than 10. Now let me share with you Adobe advantage nobody is talking about. Here in this tweet, the guy is sharing that he started developing characters and story inside Adobe Firefly. Then he generates cinematic still using Nano Banana 2 directly in Adobe Firefly. And after that, he turned those images into video using Clink AI 2.5 Turbo inside Firefly boards. And once he had multiple clips, he refined the sequence, locked the storyboard, and bring everything into Adobe Video Premiere 2026 for final editing. So the big advantage of Adobe is that they have ecosystem for creators to work with photos, vectors, videos, and create high quality films and movies. And they have a huge amount of data. They can use this data to train their models and always improve the quality. Therefore, I think the data is real mode for the post-AI era for Adobe. Now, I believe the real reason why investors are not buying the dip in Adobe stock, the first one, annual recurring revenue continue to decelerate. We can see that annual recurring revenue was around 12%, then reaccelerated to 14%, and now decelerated back to 10.9% in the latest quarter. So the first thing investors are waiting is to reaccelerate the annual recurring revenue for at least 2 quarters. And the second thing management can do is to mention during the earnings call that AI products are driving significant amount of annual recurring revenue. For example, currently they mentioned that 250 million is driven by Firefly and other AI products, but this is too small part of the Adobe's quarterly revenue. So if they say that 500 million, 750 million is driven by AI products and growing triple digit, this will bring back investors' interest to Adobe stock, and that's when the stock will rebound and rip higher. Running the projection on Adobe to understand which return investment you can get if you buy shares of Adobe today. Starting from the base case, from the revenue perspective, I project 8% for the next 2 years, then 6%. Net income margin static at 30%, and PE is static at 15, which is very, very cheap for such high quality business. In this case, we can expect 96% upside for the next 5 years or 15% CAGR. Now, let me remind you that Adobe is buying significant amount of shares, so we are also counting buyback rate of 6% of the company per year. For the bull case, I have a bit better numbers. I have 300% in the next 5 years, which is 4x. Let me show you how. If Adobe can grow at 10% for the next 2 years and then reaccelerate the revenue to 12%, with net income margin static at 30% and PE expanding to 25 from current 15, because in the end, Adobe is a very profitable company, recurring revenue. So 25 is actually relatively cheap for Adobe. So I would not say this is too bullish. And in this case, we can expect 4x for the next 5 years, which is 32% CAGR. And for the bear case, even for the bear case, I do not see how can you lose money in Adobe stock for the next 5 years. 5% upside. Let me show you how. For the bear case, I have deceleration of revenue from 8 to 7 to 6 to 5 to 4%. For net income margin declining from 30% to 25%. And for the PE, just 10. So this is basically Verizon or AT&T type PE. In this case, we still have positive returns for Adobe stock for the next 5 years, which is absolutely ridiculous. Let's run reverse DCF to see which implied free cash flow growth is expected for Adobe to justify the current share price. And you will not believe, but the implied free cash flow growth expected for Adobe in the next 10 years is minus 1.6%. So which means in English, Adobe should not grow the free cash flow at all for the next 10 years. Now Adobe is making almost $10 billion in free cash flow, and in 2035, it should make only 8.39 billion to justify the current price. Reverse DCF is shouting, Adobe is dirt cheap at these prices. So the only what we need to change is the sentiment around the stock to rip higher. From the TA perspective, where is the spot to buy Adobe stock? Firstly, let me mention I am not financial advisor, and do your own due diligence before you buy or sell any equities. From what I see on a chart, the chart is very bearish. This level we already lost at $280 per share. So now we are just keep going down. All the moving averages are pointing down. There is very good indicator showing where shares was mostly bought and sold for the company. This indicator is called visible range volume profile. Let's use this indicator to understand where we can actually start buying the dip in Adobe stock. So using this volume profile, we can see that we are almost lost all this segment where these buyers and these buyers were accumulating their shares. So now if we're going down if we're going down more than 225, basically the next support for us will be $100 per share. I would say this is too bearish, especially from the fundamental perspective. We see that the stock is too cheap to ignore. The free cash flow yield is reaching 10%. The reverse DCF is showing that free cash flow should not grow for the next 10 years to justify the current price. From the perspective of projections, we are getting positive return on the next 5 years, even on the most bearish assumptions. So I believe from fundamental perspective, the stock is almost ready. From the technical perspective, I do not see any signal to buy the stock as for now. Probably the best strategy for investors is just to wait for two catalysts I just mentioned in a video, which will turn around the stock. If you enjoyed the functionality of InvestKey to analyze the financial statements, to run reverse DCF, to run advanced projections, base case, bull case, bear case, to build any kind of chart in a chart builder or find hidden gems in a screener, try InvestKit yourself. I will leave the link in the description below. Currently we are doing beta and all the premium functions are available for free. Thank you so much for watching and I will see you in the next one.